All right. Hey, everyone. Welcome to another episode of Market Talk. I am your host, Tom Vays, and I'm joined by a guest, first time on this show. Let's welcome Tom Luango to the show. I don't know. I know a lot of people that watch me have asked for you to come on the show. I have only been recently familiar with your work. I've seen you as a guest on a couple of podcasts. The one that's most memorable is the Duran. Which is great, which is a show that I like to listen to keep up on my geopolitics. And we'll get into geopolitics in this episode. But at the moment, Tom, why don't you go ahead and introduce yourself, your background, and how you got to this position doing what you do.
So yeah, I'm Tom Luango. I'm the proprietor, effectively publisher of Gold, Ghosts, and Guns. It's both a blog, a podcast, and a Patreon service. They're all kind of the same things. Parts of it are public, parts of it behind the paywall, clearly. With the basic idea that I'm a former chemist and an Austrian economist and a hardcore libertarian, and well, frankly, just all around gadfly of the entire existing order. And I've been doing this as a hobby for a long time, even when I was a chemist 20 years ago. And today, so it's like Dave Collum. You know how Dave Collum is like, he's the head of organic chemistry over Cornell University, but markets and trading and investing are his hobby. Well, guess what? You go down that rabbit hole and eventually it kind of takes over your life, especially if you're good at it. I got hired by Newsmax in 2013 to write a gold stock advisor newsletter. And then I just kind of kept doing this as I went independent a few years ago, and slowly but surely we are here where we are. And what I realized is, very early on, is that just saying, hey, look, man, just buy gold and forget about it doesn't work. When you're actually having to give people good, actionable advice, you have to be constantly be upping your game, because the markets are many things, and not all of which are staunchly by the numbers. And in this world that we live in today, the world is so freaking politicized that to ignore the geopolitical or even the larger aspects of the bigger picture than just whether or not inflation's running hot, so should the Fed raise by 25 basis points, none of that matters. Some of this stuff is much, much bigger than that. And I think we're going to have that part of that conversation today.
Yeah, and definitely looking forward to it. So digging into some of the things that you've mentioned. I got a funny story about buying and holding gold. I'm sure you're going to laugh at it. And it involves Doug Casey.
Okay. I know Doug. I met Doug.
And hey, guys, give Tom a follow over on Twitter. I do have an agenda. Before we get into the agenda, everyone is now panicking because Bitcoin had fallen almost all the way back to 24,000, and it's now back. So real quick, I'm going to give my 30-second view on Bitcoin, even though we are going to cover it later in the show in more detail. Guys, I'm still bullish. I think this was a pivotal reversal off of 20,000. Everything in the world aligned for this to be a reversal, from technical analysis to the banking scare we just had, to lining up with cycles, the 4-year Bitcoin cycle, which usually sees a top and a bottom within that cycle. We've already seen both this cycle. I don't think we'll have a new high until the halving, but it's possible. So we are going to dig further into it. For now, I'm not concerned. I'm expecting us to close this week above 25K or around 25K, and setting us up for nice open air move all the way up into 30. I don't know if you want to comment on Bitcoin now.
Sure, I do. So Tony, you don't know this, but for my patrons, I do twice weekly market reports on Wednesdays and Sundays with about 15 minutes worth of commentary, and then I do about 35 minutes with the chart analysis, starting with gold, going to gold, silver, Bitcoin, oil markets, the 10-year, the Dow, and then sometimes some bespoke chart reads, and then whenever else I think is important, we had looking at the euro-dollar futures curve or wherever my brain takes me. But when I'm looking at this stuff and I'm sitting here grabbing my mouse, and I know you guys can't see it, which is silly actually. put the weekly chart up, just make it small and get rid of like
Yeah.
all the extra stuff, because it's really very simple what we're dealing with right now. The that's looking to me like a clear one weekly reversal signal that we're seeing on the weekly chart on Bitcoin. If you dial right in, you'll see what I'm talking about. And by defining a reversal as, you know, after a trending move in one direction, if you close above the high of the previous downtrend, or you close below the low of the previous uptrend within 2 bars, that's a reversal signal. And I don't use moving averages. I don't play around with, you know, Bollinger Bands or anything. I just keep it really friggin' simple, and then do some quantitative analysis as to the checking probabilities of highs and lows. And it's very clear that you've got horizontal resistance at about 24.5. You've got on the weekly chart, you got what, a quadruple top. If you just draw a straight line across going back to July of last year, it's clearly you've got a quadruple top there at 24.5. You know, you close above that and that's a breakout, right? You've got the spike low in April. You've got all that centered around that 24.5 to 25 area. So you got a weekly close below that or above that, then you're going to start. If in a market is illiquid, relatively speaking, as Bitcoin is right now, because a lot of the liquidity has been taken out of the markets, because a lot of the money's been pulled on chain and off the exchanges. Like, if to what extent there is a short covering rally can happen here. Normally in a situation like that, when you've got a formation like you have on the weekly chart, you would normally say, well, there's going to be some short covering. The shorts will then take you to 30 grand and blah, 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 blah. It's going to be hard to say in a market like Bitcoin right now, because of all the liquidity has dried up after FTX. So, which is both a good thing and a bad thing, because that means that anybody who wants to buy Bitcoin is going to be moving the price. You know, any demand is going to move price, and that's what we've been seeing. So, and I love the volume numbers that I saw on the chart that you had put up earlier. So at the beginning of this,
Oh yeah,
the volume was absolutely telling you that this is bullish accumulation.
Yeah, 100%. And I just pulled up an article that I wrote in 2015 when I was talking about the trend change from a bear market to a bull market for Bitcoin back in 2015. And we're right here. We're at number 3 right now. Yeah. Number 2 was the move back to 20,000. Yep. We did not break the $15,000 low. Yep. We rallied back. This is that $24,500, $25,000 zone, and we're breaking it right now.
Yeah, yeah.
And this is
the other thing to watch. And then the other thing to watch for, we're right in the middle of the month, so watch this weekly breakout, right? And if it holds, then you wait for a monthly close that signals the same kind. I'm very fractal when I look at this stuff. I'll look at the weekly, the monthly, and the quarterly charts. And for Bitcoin and for many things, you have to build your own quarterly charts, by the way, because very few charting services will give you a quarterly chart. But I build them by hand in Excel and then present them in a slide deck. I do this every Wednesday and every Sunday, but I've got the spreadsheets already built, and it's not that difficult. But doing it, it originally was, right? So you've got to go in and by looking at price and time that way, you really can see if you see a breakout happening, you then check to see if it propagates through time. And if it propagates through time, then it becomes that much more powerful. Like, it's one thing to see a big move on the daily chart, and then, you know, by the end of the week, if you don't get the close, who cares? It doesn't mean anything. Like, you know, so we had so 4 days ago, we had a reversal signal. I'm looking right at it. You got a reversal signal on the daily chart 4 days ago. We got now a nice, big, strong 4-bar uptrend right into what effectively is horizontal resistance at 24.5 or so. Right now, if we don't get the close this week above the weekly chart, above the weekly high, then this is just a snapback rally. It's just a reaction rally, as Martin Armstrong would put it. And we're going to fall off again. Now, then, to see where it's going to fall back to, if it only falls back to 22 or 23, we're going to find out whether or not this rally is, you know, ready for prime time or not. It could not be, right? And you wait for a longer time frame breakout to confirm what you're seeing in the shorter time frame. It's very important in technical analysis that you do that, because that's how you protect yourself from whipsaws and false moves, because false moves happen all the time, especially in markets as illiquid and as volatile as these are, and as cross asset correlated as they are, thanks to high frequency trading algos and all the rest of it. So
Yeah.
you just got to watch yourself. You got to be very careful.
All right. Thanks for that commentary, Tom. So we do agree. I think that I would rather see a close in that 24-25 zone and then break out next week or even consolidate for a few weeks, because you know as well as anyone, the faster you go up, the bigger the pullback. So
yeah, I would agree with you, Sean. I would like to see Bitcoin not close above 25 here, right? And then take the time to pair off a little bit, pull back to 22.5, trade sideways for a couple of weeks, use that to build a stronger base, and then go higher. That's the way I would. That's what I would be hoping for. But I've also been really surprised by the strength of the move that we saw over the last 2 days. So I'll be honest with you, I'm surprised by the strength of the move we saw in gold, even though, you know, the markets were all breaking down. You know, I expected a stronger move into the dollar, to be honest with you. So.
All right, so I would like to cover all those markets, but right now I'm gonna jump off of screen share, and I don't have anything prepared to show any pictures of it. I want to talk about what just happened this week with the three banks. I've done multiple spaces explaining why it happened and how it happened. Maybe I'll do a very quick recap. These three banks were three completely different issues. And then I'll get Tom's take on it, and if he thinks the government did the right thing, and that will transition us into, did the Fed really cause this, and what is the Fed's upcoming plan, considering the CPI numbers came out. So real quick summary on the three banks. We have Silvergate, we have Silicon Valley Bank, and now we have Signature Bank. So the last one's going to be super simple. Silvergate Bank, they were a bank primarily dealing with the crypto industry. They were taking on a lot of risk. They were on the wrong side of the FTX stuff. They were on the wrong side of, I think, BlockFi and maybe even Circle. And they got themselves into trouble. And that bank had to go pretty much. I mean, they got themselves into trouble with shitcoinery. By the way, Tom, just so you know, I am as Bitcoin maxi as it gets. I think everything else is nonsense. And the majority of my audience, obviously your audience.
I am not, but I am a proof of work. I am a proof of work maxi. That's the way I put it.
Yeah, I'm happy to do a whole other show with you where I can explain my side of it, and I'm sure I'll switch you over, but we're not going to do that here.
I sincerely doubt it. I've been here since 2010. So, and as an Austrian and as a firm believer in the law of diminishing marginal utility, I don't believe anything is the end state of any technology, and that's why I'm not a Bitcoin maxi.
Oh, we still have only one internet, so we'll get there.
Fair enough, but we'll see.
Okay, so that's what happened with Silvergate. Silicon Valley is a lot different. Silicon Valley had almost nothing to do with crypto. It was banking a fraction of the reserve for one company, Circle, but that fraction of their reserve back in their stable coin was like $3.5 billion. So even though they weren't banking too many companies involved in crypto, this one account is disproportionately huge at $3.5 billion. Other than that, the bank's reputation has been for being a very friendly bank to Silicon Valley and early tech startups. And most startups these days are tech. Otherwise, what the hell are they doing? That's really where all the innovation has been happening. And so they were also on the risky business on that side with that portfolio. And with some of their savings, or most of their savings, they decided to start buying 10-year US Treasury debt, which according to the government is risk-free and safe and all that. Except the Federal Reserve decided to raise rates faster than at any point in history. And we're not going to go into the deep dive of that. I've had multiple shows on this. Now, I agree with the Federal Reserve that the interest rate that they create should be approximately at this level. But I disagreed with how fast they were raising it. So, but we don't have a time machine to go back the last 20 years. Every time they dropped the rate, they dropped it way too low. And then they started raising it way too high. And we ended up in this situation where once Powell got reelected by the Democrats, he started not to give a shit. and he started to raise it.
Oh, you and I are on the opposite. We fundamentally disagree. I gotta cut in here, dude. This is completely wrong.
All right, we'll talk about that. I want to talk about that. Now, like I said, okay, we may still agree, right? I'm just saying that he waited till he got reappointed in order to do what he's doing. He could have started doing this at a different point in his history,
because the Democrats wanted him gone, and they wanted Lael Brainerd installed to turn this into an MMT retard. They wanted to destroy us. They wanted to, their goal is to destroy the commercial banking system. Davos's plan is to destroy the commercial banking system.
No, we agree. We
right.
agree.
So the Democrats ran an insider trading scandal headed by Lael Brainerd, who was the compliance officer for the Fed president's their trading books. She signed off on all these transactions and then leaked them all to freaking Politico to try and get rid of them all. Because she was promised to become FOMC chair, and they did that and held Powell's reappointment up for 5 months. He could not raise rates until the politics of the situation cleared, until the inflation story was absolutely incontrovertible. I agree. Biden would have had every political cover to get rid of him.
No, so we do agree. Maybe I didn't state it right. He had to wait until he got reappointed before starting to raise rates. That's what I was saying.
No, you made it implied that he was doing the Democrats' bidding by raising rates. That's exactly opposite.
Oh, no.
I just want to make sure that we're on the right.
Yeah, we are on the same page. That's why I found it weird. No. Once he got reappointed, he no longer cared what the Democrats thought.
Oh yeah, no, absolutely, without a doubt. That now, did he raise rates too quickly? No, he actually listened to me. I was the only one screaming that Powell needs to go to 6% as quickly as possible. He needs
he raised it too quickly because he was breaking shit along the way. Now I say that, but my view is I don't want the economy to break. I'm not rooting for a total collapse of the United States.
I'm not either. I'm rooting for a total collapse of the European banking system and the shadow banking system, which is where the Silicon Valley story is interesting. Okay. Silvergate is very simple. It's all about getting rid of a stable coin.
Silvergate's simple. And Signature is also very simple. Signature was actually pretty sound. And I believe Barney Frank, when he says that, we don't know why the hell the FDIC took over our bank. It sounds like they just want to take out the crypto gate to the industries. Like Silvergate could have still survived. Signature could have still been operating privately. I think that was a private agenda. Might as well stick it to the crypto space. But hey, Bitcoin's pumping, so it's not a big deal. So what happened was, Silicon Valley Bank was holding a bunch of 10-year treasuries that they bought at a very low interest rate. And once this interest rate started going up super quickly, now I was talking about this for a while, but I was talking about it from the perspective that it's going to implode the national debt, the public debt that the government constantly has to reset because they never paid the principal. I never looked at it from the perspective of the private sector. I was explaining it to my audience from the perspective of the public sector. But in this case, Silicon Valley Bank did not try to hedge. They said, hey, well, we'll just hold on to these for the next 10 years to maturity. And whenever interest rate rises, the bond value of your portfolio falls if you have to market or sell it. But they didn't intend to sell it. But apparently rumor had it that Moody's was going to downgrade the bank, and the bank was going to start having problems. And of course, the big billionaire VCs got whiff of this ahead of time. They obviously told the companies that they are investing in, hey, maybe you might want to move your money. And then the rumor spread. And the next thing you know, $42 billion of outflow came out of this bank that was banking $200-something billion. And not a single bank other than maybe the top 4 or 5 would have been able to handle that kind of a withdrawal. And suddenly, and these VCs go on TV and now scream fire that there's a problem with the bank, and now everyone wants to pool their money. And the government, and by government, I mean the Treasury, the Fed, and the FDIC, which is private insurance, but it's really government insurance. They had to immediately have a meeting over the weekend. They had to put out the fire. They had to blow the whole extinguisher. They had to, I think they did a good job of putting the fire out. I probably would have done the same thing. I would have mostly on the edges. I would have done it a little bit differently. But 90%, I agree with what they did from their perspective. And what are your views on the whole thing? They're going to make depositors whole. I don't understand how the bank
I want to go. I want to go
is
through all of this. I want to go through
Yeah.
all of this to explain what really what really is going on here. Because the one thing you're missing in all of this is that all three of these banks were effectively Eurodollar pumpers. Eurodollars are offshore dollars. And I've been saying for 2 years, that's from the day that that Powell raised the reverse repo rate by 5 basis points above the Fed funds rate, that he was attempting to start draining the offshore dollar markets and drain the leverage out of the offshore dollar markets and the shadow banking system. Wait, let me
define Eurodollar.
What's that? What's a euro? I know. A Eurodollar is an offshore dollar.
Dollar loans happening outside of America.
It's not just dollar loans. It's just dollars on account. Yeah, it's just dollars on account. Well, technically they're loaned out again, but they're just dollars sitting in offshore accounts. So Eurodollars is a catch-all term for offshore dollars. Now, here's the thing. What's a stable coin? A stable coin is an offshore dollar that exists in cyberspace. It's a synthetic dollar. It's a synthetic claim against a claim against another dollar asset, in this case, supposedly a U.S. Treasury bond, right? Or the portfolio of assets that are supposedly backing the stable coin. So all of the stablecoin markets, and if you listen to Powell very carefully over the years, he's been very clear about this. He does not like stablecoins. He has no opinion on Bitcoin. Meaning, Powell's not averse to Bitcoin. He's averse to crypto. Use those two terms separately. Crypto means everything that's not proof of work. Bitcoin being a metaphor for hard, bare asset, proof of work style blockchain assets. They are not competitors to the dollar. They are complements to the dollar in the same way that gold is. They are a bare asset that can be used, that you can trade for dollars, but they are not a dollar substitute. A Eurodollar is a dollar substitute. Okay. So Silvergate, they were going to go live with their new stable coin with their SEN payment network. They had to go. No different than FTX, which was a big Ponzi Hoover of all the other friggin' stable coins. The Powell's been one by one by raising interest rates and by bursting the Bitcoin bubble of all the way up to 68,000 and down. It's all been about, at every point, it's been about taking out various stable coins. And raising interest rates then takes out the FTX portfolio, not the FTX, sorry, the Silicon Valley Bank portfolio is the same kind of thing, because the way Silicon Valley Bank was operating, which it lobbied, the Daniel DiMartino Booth went over this on Monday in an interview she did with Blockworks, by the way. You guys want to watch that. Silicon Valley Bank fought being declared a SIFI, a systemically important financial institution, SIFI, because they wanted to operate on the edges of the banking regulations. And they were. And that's part of the reason why they had huge deposits and not a lot of loans. Okay. They were playing games, and they were effectively an offshore shadow bank in Silicon Valley, as you know, funding SPACs and NGOs and all sorts of silly garbage. And effectively, my thought on this is that clearly from the Biden administration and from the years of the zero bound, that all the Congress prints all this money, it flows out of the United States through USAID or the Department of Defense or the CIA or all of these projects that send the money overseas. They get levered up to the shadow banking system offshore. They come back to the United States, and then they get levered up again. And then they're used to undermine elections by attorney generals, fund fentanyl coming across the border, all of this, everything bad that you can imagine that the Democrats have been doing. Guess what? It was all going through Silicon Valley Bank. They were building the friggin' panopticon through Google and all the rest of it. It was all happening there. So that needed to be taken out. And then Signature Bank, if it had any kind of crypto, not Bitcoin, crypto angle, they were going to take that out as well. The Fed has been shoring up and has been at war with Eurodollars for almost 2 years now. And that's why they raised interest rates as fast as they did. And I'm telling you, it was exactly the right thing to do. Silicon Valley Bank needed to go away. And it needed to be an example to all of these people that the free ride is over. We're normalizing rates. And if we have to stop here at 4.75%, well, we stop here. I think they should go to 6. I think they should even go to 7. And I'm dead serious by saying they should go to 7 by the end of the year, but they're not going to in this environment. And every time they raise interest rates, the offshore dollar markets, which I call Davos, okay, those guys fight back in some other way. So in your description of what happened at Silicon Valley Bank, who's the one who do you think told Moody's to threaten to downgrade them? And then who do you think put the whisper campaign on the streets? I'll tell you exactly who it was. It was the Fed and the New York boys wanting to take the freaking bank out. The minute the whisper campaign started, then you see the media go into doom porn mode to try and then blame the Fed for everything in order to try and blow up the financial markets and create contagion where there really wasn't any. Silicon Valley Bank isn't big enough to take down the financial system in the United States. There's $2 trillion sitting on the freaking reverse repo facility. The Fed's got $4.5 trillion worth of freaking, or $5.5 trillion worth of USCs on their balance sheets. There's plenty of liquidity. There's plenty of collateral within the system to absorb this. So, but given the circumstances, what had to happen was, and this is the really interesting and possibly even brilliant part. And remember, for those of you who know me well, you know that I don't think Janet Yellen and Jerome Powell like each other. The Treasury and the Fed have been at odds with each other since the day Powell was reaffirmed.
Oh, yeah, no, I agree with that. I actually said it on Spaces earlier today that the Treasury is the Fed's biggest enemy.
Absolutely. Janet Yellen has been cool. We're excellent. And we're on the same page. Because I've been sitting there going, Yellen is literally, every time Powell tries to make a move, Yellen tries to counteract him in some way. She finally caved on Sunday. And the deal was, okay, well, the depositors of Silicon Valley Bank, which are going to be the Pelosi's and the Gavin Newsoms and all of these, and all the shitbags in Silicon Valley, they're all going to be made whole, and they're all going to get to walk away with their gold watches. But they lose the faucet. They lose the ability to continue to do this. That's what Powell got. And what he also got was the ability to shore up the balance sheet holes in every other regional bank in the United States because he raised interest rates so fast. Silicon Valley Bank's not the only one that was like this, but they were the most vulnerable. So they blew up. And then Powell got what he wanted, which was to, okay, we're going to write off, we're going to indemnify your current balance sheet holes, because as you rightly pointed out, they're sitting on portfolios of, treasuries that, they can't sell into the market at par, but they can pledge them as a loan at par to the Fed for a loan for a year in order to clean up their balance sheets. What this does actually is it allows Powell, if he wants to keep raising rates if he wants to, because he's now backstopped the entire U.S. regional bank, the entire U.S. banking system, and continue his war on the offshore dollar system, which is what he wants to do. That's where we are today. That is a fundamentally different world than we were in on Sunday. We live in a different world today. And that world is a far better place than it was 4 days ago. And it's the truth. And that's how I see it.
Yeah. And like my view, look, I always see the Fed as a follower. The Fed does with the rates, what the free market has already started doing with the rates. So they're more of a follower, but they do have
generally,
a huge effect.
Well, under Bernanke and Yellen, they were. And then they would just print more money. Powell is different, and he has different tools available to him today than the Fed has always had in the past. And because he's always been at the mercy of the offshore dollar markets.
Yeah, Powell is definitely the most knowledgeable and probably the most responsible Fed chair we've had in a long time.
Well, yeah, I agree. But do you understand what I mean by that point? That the that what did I just say? I'm sorry. That Powell has different tools than he's had in the past. Bernanke created stuff after Lehman Brothers, and in order to keep the world at the zero bound, because that was the goal, because they wrote regulations, never thinking that the world would ever get back off the zero bound, or anybody would even try, and then stick to their guns if they did try, that they wouldn't, and this is the way the system had been architected. And Powell's like, oh no, we're normalizing rates. And no one believes it. And I've been screaming at the top of my head for the last year going, guys, Powell's not going to pivot. He's not going to pivot. You better unwind your books now. We're going to 6%. And voice in the wilderness, me and Daniel DiMartino Booth are the only twos out there screaming, he's going to normalize rates. He's going to normalize rates. Well, no, he's got to pivot. He's got to pivot. He's going to break something, and then he's going to go back to the zero bound. In the past, he was always had to do that because of LIBOR. Because all the debt in the United States was indexed to LIBOR. And LIBOR is a European rate set by the City of London. That's the key to understanding this. We are no longer on LIBOR. We are moving to SOFR. SOFR is a U.S. collateralized rate for all the debt that's in the index. The debt indexing rate for the United States is SOFR, and new products are building off of SOFR every day. LIBOR ends on June 30th. If you look at the way the world has been trading just over the last month and a half, it's very clear, certainly for the last 6 months, that the Fed funds futures market, the Eurodollar markets did not want to see the Fed go above 5% for whatever reason. I don't know. I don't go into these details. I just go, look, every time the Fed comes out and says, we want to raise rates, the Eurodollar markets refuse to move. Fed's going to pivot in June at 5%. Fed's going to pivot in June by 5%. And this held until after the last FOMC meeting on February 1st. And then on February 2nd, when Lagarde shit the bed with her statement at the ECB, and then on Friday, the jobs report came out and we put, quote unquote, 500,000 jobs on the board. Not that I believe that number at all, but the market believed that number. And then this curve shifted immediately. And within 3 weeks, the third week of February, the Eurodollar futures curve was now pivoting at 5.7% in September or December. The curve shifted out in time, meaning the market finally started to believe that the Fed was clearly going to raise above 5%. But it refused to believe that for 6 months. They believed Christine Lagarde, who doesn't know a fucking thing. She barely even knows what the hell a dollar is, for Christ's sake. She's never actually spent one. She's always lived off an expense account her entire life, the fucking cunt. Like, seriously, this is what we're dealing with. And the markets have believed this bullshit. And they believed this bullshit because LIBOR was holding itself back, because these futures curves were holding back the marketplace. And because people kept thinking, oh no, Powell's just like Yellen. Powell's just like Bernanke. Powell was forced back to the zero bound in 2020 because he had no choice. They passed the CARES Act and were about to monetize $6 trillion. What is he going to do? He's been held hostage by a QE program, by Congress's profligate spending. The minute that was over, he drained all, and they went to spend the money. He drained it all, stuffed it into the RRP facility, cut off the foreign banks from access to our banking system, and said, if you want U.S. treasuries, you got to go to us to get them through the foreign repo facility, which he put in place in the July meeting. And the rest of the U.S. banking system said, and we're not taking any of your crappy, overpriced European sovereign debt for at par to repo for if you need dollars. Fuck you. And this started with Jamie Dimon at J.P. Morgan, then moved to Goldman Sachs, and then moved to Citigroup, and then moved to Wells, and they all do it now. None of them will repo a European sovereign bond at current bond spreads. None of them. The decoupling of the European and American banking systems has already happened. It's already over. I wrote about this recently. I said, I put a 2-part series. I said, look, the war for the dollar is already over. The Fed's won. It's just a matter of now cleaning up the mess that they've made while winning the war. There's collateral damage, and SVB is just one of them. That's the way it is. Powell's winning, dude. It's like I know. We gotta move on. We got other topics. I don't have you all day. No, I know. I mean, but this is I mean, really, seriously, Tone. This is literally. No, I know it's super important. Hot take on this. I just put this shit together yesterday. And I'm like, holy Christ! He He just created an entire sump pump for U.S. treasuries to re-onshore and repatriate from overseas. So if the Chinese decide, and this will get into geopolitics, if the Chinese decide in preparation for war, because the Biden administration is not going to stop, and decides to dump all their treasuries, all 870 billion of them,
Well, they
like the
already
Russians
started.
did a year and a half ago.
Close, they
they
already
have.
started. They're almost done dumping it all. It's
No, they had 870 billion as of the last TIC report. They dumped 175.
It was
billion.
like 1.3 or 1.5 trillion, though.
It was no, they never hit more than 1.25 trillion. I've been charting the TIC report since 2011, by the way.
Yeah, I'm just estimating. I don't know the exact numbers.
So it was, as a matter of fact, Japan is still the biggest holder of U.S. treasuries, by the way.
Right. Japan's picking up the slack. Europe's picking up the slack. And domestically, it's like the demand for U.S. treasuries domestically is skyrocketing.
And guess who else has been buying for the last 8 months, has been buying an awful lot of U.S. treasuries? Is Japan and China
Australia?
Have dumped. Do you know who bought? The whole Eurozone.
Yeah, I said Europe. Yeah, I said Europe.
Yeah, Europe. And you know why? Because they're trying to defend.
Yeah.
They're trying to defend credit spreads, and they're trying to defend the euro.
Yeah. Oh yeah. No, absolutely.
And now they're going to have to dump. They're going to have to dump it at some point.
We have to move on from the interest rate thing, though. There was a good question that came up. I agree with you. The Fed should go to 6. I don't know about 7, but somewhere in the 6s. And I spent an insane amount of time doing research on net interest and how much the U.S. would owe at 6 to 7% interest. If the Fed maintains that for about 3 years, the U.S. government would have to pay over $1 trillion a year on net interest on federal debt. That curve is going to blow up exponentially. I've gone through this research with my audience already. They're well informed.
I know. I agree with you. I know, and it would take that long to get to that point where it would be $1 trillion because it doesn't all, because old coupons are still old bonds are still being paid at the old coupon
3 to 4
rate.
years.
When they roll over, they're going to have to deal with it. And there's a big rollover coming in June.
Yeah,
there's a massive rollover. Yeah. And no, I agree. And the average maturity of the entire outstanding thing is less than 5 years. Like, there's a lot of debt that has to be rolled over. There's a number of ways of getting out of that. The Fed is not going to stay at 7% for 3 years. They go to 7. It's to break something. It's to ensure that they break Europe and the Eurodollar markets, and then they can back into the 4s or the 5s. That I do believe they're going to do. I just don't think they're going to do it anytime before the middle of 2024 or even the end of 2024. I don't think they have to. But at the same time, in order to get Congress to stop spending money they don't have on wars we can't fight, how else are you going to do it? If you give them the money, you give them the ability to borrow for free, they're going to run trillion plus annual deficits. So the Congress is always trying to blackmail the Fed by forcing the Fed and the primary dealers to monetize the debt. I've been saying for a while now, he's going to pull a Volcker and force them into into a situation where they're not going to be able to do that. And by doing that, it is what it is. Like, it's fine. Things are going to break. Valuations are going to change. The idea that valuations shouldn't change is dumb. Valuations need to change. They're completely goddamn fictitious in every way. When money is free, dumb ideas don't die. Like, that's the reality of the situation. We move rates to 4.5%, and all of a sudden we get rid of Silicon Valley Bank. Maybe soon Tumblerina von Safe Space will have to get a real job, as opposed to tormenting Republicans on Twitter, like from her CS job on Twitter. Like, this is what needs to happen here, folks. And none of us should be complaining about this. We should all be cheering. Now, does that mean we all have to tighten our belts and pay off our debt and do all what needs to be done? Like, everything what Powell put in place the other day is going to be disinflationary, because people are going to save and they're going to pay off debt. But the regional banks have all been shored up at the capital level and at the balance sheet level. And that's the important part of what happened the other day. And that's the point that everybody's screaming, oh, the bailout. What about moral hazard? What about moral hazard at this point? We have bigger problems than that. And I hate to say that. I'd like to get back to a world of no moral hazard, but it's going to happen by degrees. It's going to happen in, over the course of time. It can't happen all at once. Otherwise, I hope you like Mad Max and eating dog food, because that's what you would be looking at. So
I love that quote. Where when money is cheap, dumb ideas don't die. I'm gonna use
Exactly.
that when I talk about some of those
Feel
shit.
free. I put it out there for the
That was
world
great.
to use.
Okay, so the most important topic you and I need to discuss is capital flows, but I have a feeling it will lead into geopolitics real quick. So I have to save that for last because people get so angry when I talk about geopolitics. So let's talk about markets first. Let's go through stocks, gold, oil. What's your outlook for these markets and why? And
Sure.
let's start with the stock
So
market.
let's start with
What do you
stocks.
see?
U.S. stocks are going to do very well because if I'm right that he's at war with the euro dollar system, the offshore dollar system, it means that he's going to break that system. The demand for dollars overseas is off the charts relative to the supply. There's no dollars flowing. That means the dollar has to rise. And that means that, but at the same time, it also doesn't mean that it's going to be bad for stocks per se. What it's going to mean is that U.S. stocks are going to outperform because people are going to move into tangible assets. We already got our first big rate shock. We also have, and I hate to say this, but we can't just do the markets on their own.
So you mentioned the
we have the
dollar
threat of war out
You
there,
mentioned
and in
dollar
war,
first.
what's that?
You're bullish on the dollar, right? This is my outlook for the dollar. I am also
I'm bullish
very
on the dollar.
bullish on the dollar.
Yeah, not forever, but I am bullish on the dollar for the next 18 months, maybe to 2 years. Sure. While the euro collapses, I have a long-term, just to piss people off. I'm like, the euro is going to 70 cents, maybe 60.
Oh yeah, we have exactly the same outlook. So this is an arrow I drew back in 2014, anticipating that the dollar versus its current basket would be at 150 sometime, by end of this decade, or even as high as 200, like go exponential before the collapse of the dollar. We're gonna get to that part last. Okay.
I've been saying I like 125 to. I've been saying 125 to the 150.
But that's
range.
Mostly because the euro is going to collapse, right? It's not that the
euro is going to
dollar is
collapse.
so great.
And the the bank and the change of leadership at the Bank of Japan is going to end yield curve control, but it's not going to happen probably for another couple of months.
So I'm also bullish on the stock market for the rest of this decade. And I do think that the October low is going to be a low that's here to stay. And we are more likely to break to all-time highs than to break last year's lows. So what's your view on the outlook?
Again, American stocks leading with the Dow as the, this is straight from Martin Armstrong on this. The Dow is the best proxy for international capital flow. The S&P 500 is the best proxy for the broad U.S. economy, and the Nasdaq is clearly the tech sector. So when you do that, when you break them down that way, you should see the Dow outperform the S&P, which should outperform tech in the medium term. So medium term for this 18 months, a year to 18 months.
Are you so you're bullish on stocks the rest of the year?
Yeah, no problem. Same thing with oil, same thing with gold. I think they're all I think all tangible assets are going up. I think bonds are the thing that you have to worry about. Bonds are the most overvalued market in the world, period. I mean, they just are. I mean, who in their right mind is buying a German 10-year at 2.545%? Nobody I know. Christine Lagarde, maybe, but she's not in her right mind. Right.
Oh yeah. Well, let's not mention Lagarde again. That already triggered you. Yeah. I mean,
I love making fun of Lagarde. It's great. It makes me happy. I freaking hate Christine Lagarde. Oh my God.
What's your view on the strategy of the current administration on depleting the strategic oil reserve by 50% already?
No, it's a terrible idea. What you're going to fight? You want to fight a 2-front war without diesel fuel? What are you going to do? Ask the Russians for it so that you can run your tanks and your half.
Well, here's the ultimate. See, this is like a 2D, 3D chess here, right? I think they want to deplete the entire strategic oil reserve when the Republican takes office in 2 years.
What they really want is to be able to write a headline that they fixed gasoline prices coming into an electoral season. They're not really thinking that far ahead. What you got to look, the Biden administration is really the Obama administration. The Obama administration is as evil a strategist as you could ever ask for, because he's a true believer in this stuff. If you think that that Obama is just, some jug-eared, Manchurian candidate. I got news for you. No, he's not. He's a very shrewd operator. He knows exactly what he's doing, and he hates the United States. Now, and he works for globalists. No different than Tony Blair or Keir Starmer or John Major or Boris Johnson or Emmanuel Macron or Merkel or any of the rest of those feckless fuckwits. Every goddamn one of them believes in this, and that they all want to destroy the United States because they all don't believe in the private production of capital. And once you understand that that's their motive, then their motive is to destroy the private production of capital and roll everything up into some form of government control. If it's not backdoor, if it's not overt nationalization, it's backdoor nationalization through unrealized capital gains tax, wealth taxes, and all the rest of it. Okay. In order to force owners to sell their stock to pay their taxes because their stock went up last year. That's what an unrealized capital gains tax does. Okay. So thinking in those terms, that's what you're fighting. And I firmly believe that Powell's not cut from that cloth. I firmly believe that Christine Lagarde was chosen to do what she's been doing. Same way that Mario Draghi was chosen, same way that Georgieva now at the IMF was chosen, same way that, all the rest of them were chosen. And so once you're thinking about it in those terms, once you're seeing the game from that perspective, then the moves being made make perfect sense. Strain the strategic oil reserve while you're trying to provoke a two-front war with two nuclear powers. Why are you trying to destroy your own currency while you're doing this? Why? Everything the Biden administration has done, other than the CHIPS Act, which has caveats in it, which would be onshoring U.S. chip manufacturing, but with a lot of caveats and a lot of strings attached to that money, by the way, which would effectively nationalize a lot of the companies that would be bringing that manufacturing back on shore. Looking at some of the covenants between the U.S. and the U.S. government and Intel, for example. That's like the only thing the guy has done that was in the U.S.'s best interest. That's why the border is a sieve. That's why all of this stuff is happening. But if you notice in the last few months, since the Fed has been able to raise interest rates, and since the FTX debacle, what you're seeing is bits and pieces of real information or real signposts that the counter revolution against these fucking commies is taking shape. Because we didn't get Build Back Better. We didn't get the infrastructure bill in their original forms. We got them as kind of classic old school stimulus spending where, they'll give rebates and whatnot. They didn't just pump money directly into the system and then force the Fed to monetize it, which was their original plan. No, they got a whole lot of like tax incentives on the back end and stupid stuff like that. The classic government intervention into these markets, which is all indirect support. If there's no appetite to make those investments, then those incentives will never show up. If nobody buys an electric car, right, then the government's on the hook for the liability of the subsidy for buying the electric car, as opposed to handing you $20,000 to go buy an electric car, which is different. Okay, that's different. And that's where we are today. So they won that fight. They won all of those fights in 2021 and 2022. Biden was able to write a headline right before the last Congress exited the scene. But FTX was a major money pump for these people, right? Major money laundering operations. So was Silicon Valley Bank. It's gone. And for that reason, and then there's the other things that are happening. When you have Kevin McCarthy leaking all of the 1-6 video, even if you don't believe that Kevin McCarthy is, anything other than a rhino, someone's pulling his strings to say, we're taking these people out. We're setting that up. So what we're seeing is a bunch of classic counter moves, knives out, political assassination attempts. Why do you think they tried to nuts and sluts friggin' Jamie Dimon last week? By tying him to Epstein. Guess what? The guy who's trying to the guy who named him, trying to put Diamond behind the 8 ball with Epstein, kill him by guilt, shame him through guilt by association. Diamond turned the tables on him and did the same thing and filed a lawsuit against him in friggin' federal court, like yesterday. Like this is all happening at the same time. None of these, there are no coincidences here. This is how these people fight. And until you see the board that way, the markets don't matter. They're the secondary expression of all of this other stuff that's happening. So it's why I never even look at anything other than a weekly chart. Rarely even look at anything. I rarely even take a cue off anything less than a monthly chart, because you need to look at the broader term trends.
So, I do the same exact thing. Only in Bitcoin do I look at, like, because that's my audience. But other than Bitcoin, I only look at weekly.
Right.
Pretty
If
much.
you're doing global macro, there's absolutely no reason to look at anything. Weekly charts are your
global macro,
momentum charts.
We're transitioning. Okay, now we get to the meat and potatoes of the conversation. It's going to move into geopolitics. But before we get into geopolitics, I would like for you to explain the importance of capital flows, because there's just so few analysts that talk about it. I learned about capital flows from reading Martin Armstrong. Look, I disagree with Martin Armstrong on a lot of stuff. Bitcoin being the biggest one. He was completely wrong about Iran with Saudi Arabia. We just saw the peace deal. I'm like, what do you like? There are things that we disagree with him about. But I learned so much about how markets move, why they crash, and the importance of capital flows. And I don't know any better historian of how currencies rise and fall and how civilizations rise and fall. That knowledge is absolutely priceless. I've been reading blogs since 2013. You give us your view on
I've been reading Martin since he was in jail. I used to get the missives from Jim Sinclair used to publish the missives on JS Mindset back in 2005, when Martin was typing them up on an old typewriter and hand drawing the charts in. I used to read them then when he was in jail. I'm a big fan of Martin Armstrong, and yes, I do also think that, look, Marty even says this, and rightly so. But like at the end of the day, he's got people in every room around the world. He's got an unbelievable set of contacts, and he's got Socrates giving him the broad strokes of what he thinks is going on.
Well,
you put all of that together, and you can have and you salt Socrates to taste, dude. I'm not here to say that I think it's that it's a predictive AI of anything. If it is, we are all fallible in our ability to interpret what it's saying. Even again, salting to taste how accurate you think it may or may not be. Okay, so now that being said, I think Marty is not necessarily the world's best geopolitical analyst. And he should admit that, since he said, I never wanted to be a geopolitical analyst. He said that multiple times in multiple blog posts over the last 18 months. And one of the things that my community and I do is talk about these things in these terms. We sit around and we brainstorm on this stuff all day long. My patrons, I have a private server for them, and we chat about this stuff constantly. And that hive mind, I think, is a very powerful place. And so, yeah, I could see the détente between Iran and Saudi Arabia coming a mile away, because they've been holding high-level talks for 3 years, right? I could see the détente coming between Turkey and Syria from a mile away, right? I can see Turkey moving out of the orbit of NATO a mile away.
Well, I've been talking about that.
This has been going on since 2011.
Mexico trying to join BRICS surprised me a little bit. I think it's smart, but I didn't see it coming.
Oh, I did. I absolutely did. Because remember, it was Erdogan and Turkey that backstopped Iran in 2012, opening up the gold window to settle Iranian oil trade outside of the SWIFT barrier. Remember, that all got laundered through Turkish banks. Iran got paid in gold for their oil, but it was laundered through Turkish banks because Erdogan allowed to change the banking rules to allow Turkish banks to hold gold as a tier 1 capital asset in contravention of Basel II.
All right, let's do currency.
Seriously, this has been going on for a long time.
Now we go into individual countries.
Yeah.
Let's talk about the importance of capital flows. And then I'm going to pull up a map of the world, and we'll go through the countries.
So the big thing with capital flow, Tone, is very simple. And I'm going to make it very, very simple. Capital flows are where it's treated best. Okay. If you raise the cost of doing business in one place, all you're doing is ensuring that at some point the business you would have gotten is going to go to some place else where it's cheaper to do the business. The reason why the dollar is the world's global reserve currency is because it's been the cheapest currency in which to do business until we got a bunch of sanctions happy, slap-headed monkeys running the friggin' country, thinking that, oh, we're the biggest swinging dick on the planet, and we're going to use that to browbeat everybody into submission. From the day that Obama threatened the Swiss and UBS over SWIFT expulsion to open up their banking privacy, this was where we are today, was written in stone. It was going to happen because once you go nuclear, no other weapon you use has any power. And SWIFT was the ultimate weapon to use against the Swiss. So they used it and the Swiss caved. UBS gave up all their banking information, right? Supposedly to find Nazis, but really it was to expand know your customer and AML, anti-money laundering, FATCA into the Swiss banking system. So when he
wait, now the Swiss decided to fight Nazis, not in the 40s.
The Swiss were neutral, and their neutrality should, and as always, should know no bounds. Because we can also talk about, who actually funded the goddamn Nazis, and then we have to start talking about City of London, and everybody will start getting angry with me. So, because the British Crown clearly helped, and through the U.S. banks clearly helped the rise of Hitler, because their ultimate goal. I actually, the older I get, the more I believe the Russians on this, that the West created Hitler to throw at the Russians, to destroy Russia, because the Brits have had a hard on to destroy the Russians since the 1860s. And Halford Mackinder wrote about it and told everybody what the plan was. And all of our foreign policy is based on that basic idea of controlling the world island. And if we can't control the world island, no one can. Mackinder, look up Halford Mackinder Heartland theory. It's also known as the Wolfowitz doctrine, the Brzezinski doctrine. It doesn't really matter. It's all the same thing. So capital always flows to where it's treated best. If you look at the way the European Union is being designed, this is why I hate the European Union. The European Union is being designed as the ultimate technocratic superstate with the ultimate set of Byzantine capital access rules, in order to completely lock down capital flow within the European Union. And all of the European-based institutions, the World Bank, the OECD, the IMF, the World Trade Organization, blah, 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 they're all in the tank for that regulatory scheme, and to export that regulatory scheme to everyone else. The European Union is the California model for the entire world. California, in the United States, we have a saying: every bad idea starts in California and then travels east. Why? Because California is the most powerful of all the states with its electoral votes and with its economy. And therefore, what California wants, the rest of the United States gets. Well, what do you think the European Union is doing? And they used the monolithic interest rate of the national Fed funds rate put in place by FDR to undermine the original structure of the Federal Reserve. On this, Martin Armstrong is also not wrong. We originally had 12 regional interest rates, so that there was internal competition for capital within the United States, right? So that but now California gets to borrow at Mississippi's rate, and then use that as an internal form of mercantilism to drain capital from the rest of the country into California, and then use that as political leverage to set policy for the entire United States. Well, I got news for you. That's what the euro is. It's no different, except take California out of the equation, substitute it for Germany. And now you have the European Union, which is why the Germans have this massive trade surplus and have run it for years. But why Italy can't get off, has been drained, why Greece has been destroyed, and Spain and Portugal and everything else. That giant sucking sound has been capital into Germany. Same way that capital was sucked into California. Guess what? That capital was sucked into California, and we're starting to destroy those banks. And guess who was supposed to regulate and oversee Silicon Valley Bank? Mary Daly at the San Francisco Fed. One of the biggest freaking Devosians you've ever met. So like it all makes that's the gig. So the goal of Davos, as I put it, is to perfect the European Union, crash the rest of the world, and then export that Leviathan to the rest of the world from a regulatory perspective. If the European Union is the strongest economic body left in the world after they're done destroying the world, then everybody will have to bow to the European Union's rules. And their goal is not to treat capital well, it's to treat it as badly as possible with them in control of it. On the other side of the equation are the Chinese, the Russians, the Indians, the Iranians, and everybody else going, you know what? No, we're not going to do that. And even up until very recently, the United States was going along with it. When Obama was in charge, he was moving us in that direction every day, putting a new regulation or a new executive order in place, or empowering an executive branch, alphabet soup agency to put those regulations, adopt those regulations and adopt that regulatory scheme. Trump was the interregnum when they put Powell in place, because Powell never wanted this in the first place. And SOFR architect John Williams was installed at the New York Fed. And Brexit was the thing they never wanted to see, because they always knew that they had to have City of London as the mechanism to control the banking sector and to control the flow of capital by setting the price of offshore dollars. So think of it this way. You have old colonialist Europe who considers the rest of the world the help. The Eastern Europeans get to be their cooks. The Chinese get to be their manufacturers of the cheap widgets that they get and the video games that they get to keep everybody distracted with. The United States gets to provide the capital and the military. So the offshore capital, the offshore tax haven, and military. Because we're the best tax haven in the world. If you're to the rest of the world, we are an immense tax haven. To us, like the Caymans are a tax haven, right? But relatively speaking, right? So that's who we are. So we're the gendarme of the globalists. The Eastern Europeans get, the Africans get to clean the toilets. The Eastern Europeans get to be the cooks. Okay. The Italians get to be the artists. The Chinese get to be the manufacturers, and everybody else gets to stay in the 19th century. That's the way these people think. That's the world that they envision. Minority Report with more Germans. Replace AI for Minority Report with, or replace precogs with AI, and you have Minority Report, and you have the world that they want. Okay. They tell you what they're going to do. It's all right there in front of you. So they want to, in order to keep capital from fleeing, as Christine Lagarde mentioned, hey, we have to get rid of Bitcoin. We have to get rid of the on-ramps and the off-ramps into Bitcoin, because if we don't, that's an escape route, and people will use that escape route. What a shock. That betrays the mindset of these people. That's why they want retail digital, central bank digital currencies. That's why they want to do away with the commercial banking system. It's why they want all of this gone and done and over and done with. And it's also why they want to get the United States into a war with the Russians and the neocons, and the old neocon, the old British Crown-led neocons still think that they're going to win by destroying Russia. And so now they're going to try and cleave the Russians from the Chinese and force a wedge between them. It's not going to work. The global South, for lack of a better term, is all in the tank for standing up with the Russians, because they have to. And that's the situation. And that's why geopolitics and capital flow are actually more important than the technical state of the markets. The markets actually react to all of this stuff that's happening.
All right, so let's dive into this. So this was from a presentation I gave last year. I think this was like in November or something. I don't remember when, but it was so it feels like I did it 6 months ago. Mm-hmm. And I focused on the BRICS versus Western economies. And I found this amazing article that it stated, Western-style liberal democracy is on a major retreat all over the world, including in the US. Here are the main pillars for an independent economic bloc. So if you look at the BRICS, here's what the BRICS are better at. Energy, Russia being the leader. Rare earth metals, Russia and China. Food grains, Brazil and
Russia to a lesser extent.
Mostly out of Brazil. Research and development, China, cheap goods, effective mass production, tech talent. They're listing India as the leader out of the BRICS. Global fertilizer, obviously Russia, young English-speaking skilled labor, India, cyber, military, and space technology, Russia and China. But then it says something really, really important. The only major pillar that the BRICS lack is young creative talent to develop the future economy. They will never have that in an autocratic command and control system. They produce army of worker bees, but not the out-of-the-box thinker and rebel to basically build new technology. But with the destruction of Silicon Valley Bank and taking out that funding for those young companies, now we're going on an even level. And then from that point on, I kind of did these maps of now the BRICS is not a military union, but if the BRICS did decide to do a military union, it would be like NATO would mean absolutely nothing to a military union of the BRICS. And then I ended up with my own chart that looks like this. And this was my chart of which countries are more likely to align with the BRICS and which countries are more likely to align with the G7 West. So if you're light blue, you're more likely to align with the G7 West. And I was very wrong about Mexico. Mexico should clearly be in that purple area, but the US is not going to let them go so easily, right? No. As long as they're not in a military union with Russia or China, American tanks aren't going to roll in. But they're going to try to have some kind of a regime change in Mexico. That's for damn sure. But the countries that, I mean, everything in red is pretty obvious and not debatable. I had Saudi Arabia, I had Iran, but then I had certain countries in yellow, and those are the countries that can potentially go either way. And Venezuela was one of the countries to keep an eye on. That was just my list. And looks like America suddenly became buddies with Venezuela for their oil. But I think sooner or later, Venezuela is going to see the light, and they're going to get out of the relationship with the United States. I have Hungary and Turkey as the first two countries to get out of the European Union in the case of Hungary, get out of NATO probably earlier in the case of Turkey. And then you have Serbia also in yellow. They can go either way. Georgia, the US is definitely stirring shit up in Georgia right now to try to create a two-front war for Russia, but they're likely to also be with the East. Pakistan is in a bit of nowhere, and Indonesia is one to watch as well. They have a very high GDP metric, and Indonesia can go. I think Indonesia will align with the East, and South Korea is going to have a lot of shit to think about. So that's kind of my geopolitical view.
So let's go through that real quick. The Serbia is they're putting as much pressure on Serbia as possible. Clearly, likely to fail. So the Serbs are very, very pro-Russian. Just today, I saw some stuff coming off a Telegram where they tried to stir up anti-Russian sentiment at the government level, and there were massive freaking protests, and they were calling for the particular parliamentarian who I guess introduced a bill or whatever, and that was like the Serbs are not. There's nothing is lost on the Serbs. They're very, very angry with the way this is laid out. They don't have a lot of power. Ukraine is going to wind up likely partitioned with rump Ukraine. So to talk about Hungary, you have to talk about Ukraine, in that if the Russians are capable of creating, a land corridor into their transit system, meaning their train system, east for the Hungarians, they are no longer landlocked, and therefore the EU can't cut them off. So Hungary is a very, very pivotal country in this respect. This is why Putin is running a war of attrition against the Ukrainian military, hoping, and I think successfully, operating things to allow the financial system of the United States to break under the weight of the Federal Reserve's high interest rate policy. Because if you break the European Union's funding cycle and you force them to default, and you force them to do what George Soros wants them to do, which is default on the debt and issue perpetual debt, and it will make Europe an economic pariah state. And then politically, there's no way the EU can survive that. Okay. So that is what Hungary is hoping for. I think the Russians are taking as slow as possible. I look at the map and I say, okay, well, why didn't you Crimea is clearly deep red. So is Belarus. The Union State is between Belarus and Russia is, for all intents and purposes, they are Russia for all intents and purposes. Armenia and Georgia are the two big ones, because it's clear that the US and the Brits are activating the Azeris to stir up shit between the Armenians and the Iranians. Aliyev in Azerbaijan, he wants to sell gas to the Europeans, but at the same time, he's putting himself in a very, very dangerous position. So
yeah, Azerbaijan is right here, guys. Not everyone knows where
Azerbaijan's
very just pointing out what a country is.
Yeah, and then
that's Iran.
Armenia is to the east, and Armenia is to the west of that.
Yeah, Armenia is right.
And you got to realize that Armenia is being run by a man by the name of Nikol Pashinyan, and Pashinyan, or Pashinyan, sorry, is he's a Soros appointee. He was brought to power through a color revolution, and understand that he's still only kind of held on to power by hook or crook when, things flared up a few years ago over in Nagorno-Karabakh. So, and then the Georgians are firmly rejecting the latest color revolution attempt there. So that's going to put pressure back on Pashinyan. Erdogan has called for elections on May 14th. The earlier he calls for elections, the better. It'll give him a chance to survive it. And especially if the Russians push in Ukraine, right? Because we already don't have diplomatic corps in the first place. Everything, all of our, believe it, just don't forget, we do not have unlimited resources to go around the world and start color revolutions. All right. We just don't.
How do you see Ukraine ending? Because this is a map that I started recently, I got my hands on. It is from 2003. In 20 years, the Russian language has decreased in these regions, but I still believe this is the river, basically.
Yeah,
Kiev,
that's the Dnieper.
right there.
That's the Dnieper.
I believe that Russia will, at the very least, take over these regions that had a greater than 50% Russian-speaking majority back in 2003. I think that this border here and this border here will be the new border if Ukraine negotiating table.
Yeah, the southern.
Otherwise, it will be worse.
The southern border out to Odessa is going to be the flashpoint as to whether or not we're willing to fight World War III or not.
Odessa's right here.
Yes, Odessa is the key. Everything I said about Hungary, and note to the northwest of that is Moldova, where they're stirring up shit in Transnistria. And they're stirring up shit in Transnistria, which is the Russian breakaway enclave. Notice how when Russian speaking enclaves want independence, they're not allowed to have it. But when Hillary Clinton backed Serbs, want independence, they get it. What a shock. The little area that you call the center, that's probably what's going to be left. The west is, the Poles are going to move into Western Ukraine, I think, at some point to offer themselves up as tripwire troops to try and get an Article 5 declaration. But if they've tried this already, I don't know if it's going to work. I mean, it's all out there. The big thing is that you cannot allow the Russians to take Odessa. If I'm speaking purely from the globalist point of view, they cannot allow Odessa to fall to the Russians. If so, it allows Hungary a way out to the Black Sea. It allows it. There's so many things that change if the Russians take Odessa, and the Black Sea becomes becomes a Russian lake, and the Turks control the Bosphorus and the Dardanelles through the Treaty of Montreux. And this stuff's sincere. So understand that they will literally throw everything imaginable to keep the Russians from taking Odessa, which is why the Russians are bleeding the Ukrainians white and forcing, and they will rather slaughter every friggin' Ukrainian they stick in and hate to do it, but they will. Every Ukrainian that they stuff into a uniform and send them to the front, the Russians will, all right, sadly, we're going to have to kill you now, but we're going to do so. It was your choice. You didn't have to go, but okay. They put you in a car and they put you at gunpoint and they put you in a car and gave you a rifle and sent you to the front. Sucks to be you. And I hate to say it in those terms because this is exactly not what the Russians want to do. And they've asked for, and they begged the West for a relatively peaceful solution out of this. But
I agree. They did not want to go in there and start shooting. That was literally the last resort. Yep. After 8 years of not being able to peacefully resolve the border dispute.
Yep. No, it's very, very clear. Very clear and very, very obvious. And the question is that everybody should ask. And again, I am not going to give you my opinion on this. I have my opinions about what I think the Russians' military capabilities are. I am holding them in reserve. Okay. And I'm just telling you what I think, what we've seen so far. And what we've seen so far is that the Russians do not have the ability to take Odessa if NATO stands up to them. Now, that is not to say that the Russians have shown us everything that they are capable of. I don't believe that. But until the Russians show us this, we have to assume that they can't. And now, that's just the right way of looking at it. It's not my opinion, man. That's just the way you should as an analyst, because we don't know what's going on. But I can tell you this.
I agree. Russia would struggle. And by the way, when we say Odessa, there is Odessa, the city, which I've been to several times. It's pretty cool. And there's also Odessa, the region. In Russian, it's called Oblast. So when Tom says Odessa, he means the region, not necessarily the city.
Oh, I mean the city.
The city, but really? Okay.
Really, what's important? They'll take as much of the oblast as they can, but what they really want, if they can get the whole oblast.
Well, they need the oblast because the oblast touches Transnistria, and but once you take the city, you take the oblast. But
I think you're right about that. I'm not arguing with you. All I'm saying is that depending on how these things, nothing is a guarantee in war, dude. Like,
but Russia does not want to fire on the city. They want to take the city. They would rather.
Yeah, they don't want to destroy. Yeah, and the Brits are such fucking assholes that they will force the Russians to level Odessa to take it, the same way they did Mariupol.
Probably, yeah.
You have to assume that, because look, why did the sun never set on the British Empire? Because God didn't want these fucking people running around in the dark. Okay. And I'm dead serious when I say that. We're talking about that level of that pernicious, sneaky refusal to admit that they're wrong, arrogant. There's nothing worse than this is the thing that we cannot get past. So.
Real quick, like that, if NATO does come to defend the Odessa region against Russia, I agree with you. Russia will have one hell of a hard time.
It will struggle
fighting NATO. But if that is to happen, like NATO and the West is gambling that Russia is not going to request 500,000 to 1 million North Korean troops to be brought in, and China might get involved. I mean, NATO would be playing with fire. Because they're not going to want to, because China and North Korea are not going to want to see Russia lose.
No, they can't.
I know. So NATO will be playing with fire. Now, I heard talk about Poland potentially going in and taking West Ukraine. Now, I think that they have to, first of all, they're going to need Russia's permission to do so. Otherwise, Poland and Russia could get into a war. So they will.
Well, what will happen is the Poles will just ask Zelensky, as the Zelensky regime's and the last thing that the Zelensky regime does before it's overthrown, and hopefully the best thing that could possibly happen right now is that Zelensky is overthrown, because then they'll. I agree with you on that because the Ukrainian military leaders at this point are done with him, and they want to get rid of him. He is being propped up by the Brits, by the Americans, and by a lesser extent by Klaus Schwab and the friggin' and the WEF. He's there for a reason, to start World War III. That's his job. It's what he was plucked out of central casting to do this, and this what he's doing today. The Poles have never met a geopolitical challenge in which they have not committed harikiri. They always do this. They always commit ritualistic suicide in their arrogance and their hatred of Russians. They always make the wrong choice. The Poles' right choice is to not move in to Western Ukraine and be tripwire troops for NATO. The right choice, the right choice of the Poles is to actually stop with the belligerents, but they won't do it.
But if the Poles take a chunk of Ukraine, Hungary is going to want their chunk of Ukraine back as well.
Yes, absolutely. Transcarpathia goes back to the Hungarians. Lvov goes back to the Poles, and that
then
only
Russia
makes
is
it
going to
easier for Hungary to get the land bridge that I was talking about.
Right, and then Russia will make sure they have a land bridge right into Hungary.
Yes, which then opens up Serbia.
Yes.
And the Turks, remember that the Turk Stream 1 and 2 flow into Serbia to provide gas for both Hungary
Speaking of gas, what do you know about the Leviathan oil field, or gas field, sorry, right here in the East Mediterranean?
I don't know a lot about it. I just know that the Israelis are desperate to try and get it, to try and bring it online so that they can bring in the money.
Okay, that's a
the
whole
problem
other...
is that the East Med pipeline is an economic boondoggle, because the geography on the floor of the Mediterranean there is terrible. You can't. It's hideously expensive to put a pipeline in there. It's not a flat seabed, and that's the problem. And that's why the East Med pipeline has never gotten off the ground. That brings gas from Israel into Turkey or into Greece, which is what they want to do. It's a hideously expensive pipeline, no different than the Southern Transport Corridor coming out of the Caspian and all the way across Azerbaijan into, bypassing Armenia through Georgia and then across Turkey. It's one of the most expensive pipelines ever made.
Yeah,
it's more
Armenia
expensive than Power of Siberia, which
Armenia
goes all the way from the middle of fucking nowhere into northern China. That thing costs, and it produces, and it ships 1/5 of the gas. Do you realize that why Nord Stream 2 is such a problem? Was that for $11 billion they were bringing in 55 BCMs a year, billion cubic meters a year, whereas for $40 billion, the Azeris and the Europeans underwrote the Southern Transport Corridor pipeline to bring 10. The pipeline will degrade into rust before it ever pays for itself. It was literally a loss leader to embarrass the Russians. But, a project created by globalists for globalists, not for Europe.
All right, let's move away from, I can only imagine your thoughts on how dumb it was for Sweden and Finland to join NATO, and how dumb it was for these Baltic countries, which are hanging on, whose existence is hanging on by a thread, to block all traffic from Russia to their own country in Leningrad.
They're just none of that. This is all just classic British. Let's poke the Russians and punch them in the mouth and see if we can get them to react. And remember the adage: you don't win a fight by, the way you win a fight is not by how many punches you throw, but by how many punches you can take.
Real quick, on the eastern side of the world, your view on India and China. I think their issues are way overblown. I think it's not a big deal.
They are. It's a classic British. It's a classic British/CIA operation to constantly, send the two countries in against each other. Modi and Xi have mostly worked all of this stuff out. It's just a matter of having to play the hometown politics off of one another to get the border dispute, down to a dull roar. And same thing with Pakistan and India. And Imran Khan, when he was in power in Pakistan, really did help Indian-Pakistani relations, which of course is why we had to get rid of him.
Yeah, that's a whole problem that's going on right now. They're trying to break into his house and arrest him. It's literally happening right now. Yeah, the U.S. has really screwed up Pakistan big time. South Korea, they're in a little bit of a pickle, aren't they?
Yeah, they are. But at the same time, the Koreans are very tough people. The question is going to be what Japan does over the next few years. The Japanese, by refusing to go along with sanctions on Russia and to continue to buy LNG and oil from Eastern Russian ports, that's all you really need to know. That's the big thing, because the Japanese don't have any other options. So it was always going to be at some point that Japan was going to say, you know what? Here we are. We're still buying Russian gas. We're still buying Russian oil. And I want everybody to remember that it was that you're going to hear a lot more over the course of the next 3 or 4 years about Russian ESPO grade oil as opposed to Russian Urals grade. Russian Urals grade comes out of the Urals and goes to Rotterdam and, out of St. Petersburg into Rotterdam and back again. And that ship route, it was the coffee and cake run in the entire oil shipping industry for decades. The new one is going to come out of Kazmino up by Kamchatka, over by Vladivostok, down off the Kamchatka Peninsula, down into Tokyo, Busan, and into the Chinese ports. And you're going to see millions of barrels a day flow out of Kazmino. The ESPO pipeline, up until the sanctions, was only putting out about 500,000 barrels a day. It's got capacity for over 1.2, and it can easily be doubled. You will see the Kamchatka Peninsula, that area. Kazmino is just up the road from Vladivostok for all intents and purposes. That's going to become a major oil hub in the next 10 years. So I don't have any thoughts on Indonesia. I haven't studied
Indonesia or Philippines. No thoughts on those?
I haven't really thought. I mean, the Philippines are always interesting, but they were interested when what the hell was his name?
They have like 20,000 U.S. military bases.
Yeah, I mean, it is, and it's going to be important. But again, logistically speaking, can the United States, even though we have tremendous military logistics, will they be able to hold up in a full World War scenario? I don't know. And this
finally,
this is sincere at this point. Not with the missile technology that we have today, not with the accuracy. Ships are so dead in the fucking water. Like, I'm sorry. I don't understand how anybody thinks that we're going to fight a naval war against the Chinese and or the Russians and I don't know. Maybe I'm wrong.
Right, speaking of naval war with Chinese, what are your views on Taiwan situation?
Taiwan is eventually the Taiwanese are going to pledge to rejoin China. Remember, there are two major political parties in China. One is nominally pro-US, and one is nominally pro-China. And the nominally pro-China party just won a slim majority in the last election cycle. So the US is fighting against the tide here on Taiwan. That's why the CHIPS Act is so important. That's why that's why India is getting, why Apple is moving production to India. It's why Foxconn is coming to the United States, and TSMC, and they're, the Taiwan choke point was designed by the United States to be a choke point to blackmail the world with. They always knew it was going to come down to this. And now it's losing its power because chip production is being democratized. Look, the Chinese are making 7-nanometer chips now. And for all intents and purposes, you don't need anything better than 14-nanometer chips to run any military hardware on the planet. If not 25, or if not 20 or 22. Like, the Russians still being at 90 nanometers is a problem, but the Russians will get to 28 or 22 nanometer very, very quickly, with the Chinese helping them. So don't kid yourself, right? But the Russians have a lot of industrial supply chains that they have to build in order to get to that front. Okay, so to get to that horizon, but they'll get there, and in between, they'll buy the chips from the Chinese, who will sell them first to the Turks, who will then import them into Russia.
Anything to say on Australia and New Zealand?
They're Commonwealth countries. They're fallen, and until the like Canada until Davos falls. No, the whole British Commonwealth is going to fall into a dark age.
Any comments on Central and South America?
Not really.
Okay.
I mean, they're not really at this point. I don't think I mean, there's always a fight for copper in Chile. There's a lot happening in Argentina. People are making big moves on Argentina. And that's fine. But, you know, again, like, they're not hotspots. The hotspots here are the areas adjacent to Russia, because if you don't destroy the Russians, if you don't break Russia up, everything else fails.
But what is the probability of that? I think it's almost
very,
zero.
very low. The neocons are insane. They're insane. The Russian economy is going to grow faster than the German economy next year. Russian oil production is back to 11.2 million barrels. I went out, I tweeted out at Peter Zahan. So, dude, what was that, about 5 million barrels a day going offline from the Russians? Oops. You care to comment, dickhead? You CIA Stratfor piece of shit, motherfucker. I didn't quite say that, but I did. I think I called him a faggot.
You know we're live, right?
I don't care, right? I don't care. I really don't. Like, if I don't give it to you loud and dirty, it ain't gonna stick. This is the way, literally is the way I think at this point. Like, you've got to realize that this is like, oh, we can be all polite about it, but let's not be polite. This is the fate of the goddamn world we're talking about here. Why in the hell are we, playing nice here? It's not. This is not a British costume drama, for fuck's sake. Like, this isn't season 9 of Downton Abbey. All right, like, give me a break. This is, season 5 of The Sopranos.
All right.
It's a Martin Scorsese movie. It's not, it's not a Merchant Ivory film.
I think I've taken up. We've been going for an hour and a half.
Yeah.
We can, if there's any other topics you want to cover, we can take a sneak peek one more time at the chart of Bitcoin. Everyone's panicking now that Bitcoin has fallen.
Don't panic, people. It's fine. Please do not be gaslit. Don't let them gaslight you. Just don't ever think that, like, the people who, it's like gold. You have to realize that, like, who's going to make more money in gold than anybody else? JP Morgan. That's it.
Yeah, I agree.
Like,
one last topic. I forgot the most important topic. What is your view for the future of the United States over the next 10 years? Over the rest of this decade, let's say? Do you see it staying as a single country? Do you see it breaking up? Like, what do you see?
I've been handicapping the breakup of the United States since 2005, but it will depend on how the Fed and Congress work things out over the next election cycle. It really will come down to that. And because if the Fed wins this fight, right, and the US goes on a diet, then, look, Davos is not going to give up without a fight. They will try to break the United States up. I can see California trying to secede from the Union before Florida does. Okay.
That'd be awesome. I would love to see California secede. That would fix so many problems.
Remember, the first secession movement in the United States were the Massachusetts abolitionists who didn't want to be associated with slavers. Everybody forgets this. We all talk about the South. I live in the South now. I am one, at least an honorary Southern.
Well, the winner
I try and be a good ex-Yankee.
Look, the winner writes the history book. The North won. They wrote the history as to why the war began. Like, the winner writes the history book. Well,
and that's partly true. So, down here in the South, we still call it the recent unpleasantness. And, that's what it is. And you will never get these people to change their minds about it. And that's fine. But will the U.S. break? Again, it depends. It depends on how these things go. I think the United, okay. As a hardcore libertarian, Austro-libertarian, do I believe the United States or the 50-state compact should exist? No, hell no. I think 50 different countries sounds like a great idea. Just like I think 28 different countries in the European Union currently. I think that was a better idea. I think more countries, the better. I think the less opportunity then but I would like to see all these things fall apart organically. not as a consequence of some malign actor's desire to use that to gain advantage and to impose a false reality where they get to set up a toll booth, suck up our wealth, and then use that wealth against us as a control system, which is what we have today. Okay, that's what I don't want. So if the United States is to break up, I'd like for it to be organic, where it's a mutual parting of the ways. You know what? We don't need each other anymore. And I think that when you start to really think about the implications of something like SOFR and the the potential re-regionalization of interest rates within the United States, where the Fed moves back to its original mandated model, chartered model of 12 regional banks with different interest rates, but those interest rates are market driven. Once we don't have a common currency, why do we need a common government in Washington, D.C.? See, a common interest rate and a common government go hand in hand. But that's 20 years down the line. Maybe, depending on whether or not, there's, some kind of casus belli, some kind of catalyst, some kind of catastrophic in a mathematical sense of the term occurrence that we're not, that's not on anybody's radar. And again, watching the political system carefully, I think breaking up FTX or blowing up FTX, blowing up Silicon Valley Bank, these are two major sources of funding for those who clearly want the United States broken up. George Soros wants it broken up. Klaus Schwab wants it broken up. All the globalists want it broken up. They want to subsume national sovereignty into the IMF and the UN. This is their plan, and no one is down with it. So all we really have to do is sit back and go, you know what? No. And by the way, no. And how about no? And if we keep doing that, we raise the cost of them implementing these plans, and eventually capital flow. They have to then try and raise the cost of capital, and they're raising the cost of capital on themselves is the problem. And eventually their lives collapse because they're an ever more crazy metastable structure of, it's a Jenga tower of lies. Eventually you've got to pull from the bottom of the tower in order to keep the tower, and the whole thing just collapses. And we're in the process of watching Davos as a concept collapse in front of our eyes. Remember, Silicon Valley Bank, hundreds of solar startups, hundreds of green energy startups, hundreds of tech startups in China, in the United States, in Europe. Funding for them is all gone. That's a good thing. Go look at the chart of BlackRock and tell me what you think is happening. I see a bankruptcy chart.
Oh, BlackRock, that's a whole other discussion we can have.
Which I don't actually want to have tonight because my voice is starting to go, so I'm
I know.
tired.
Yeah, we may do this again. I think BlackRock will collapse in the next 2 to 3 years. They're just too big. They're just too big. They have to go. They're gonna go down. They're too big.
Ready? Go look at the size of their balance sheet, and then go think about how levered they are.
Yeah. People don't realize how cheap real estate's gonna be once BlackRock goes.
And don't understand, and don't underestimate how upside down they are on their portfolio. Okay,
there's no bailout for BlackRock.
BlackRock has only got about $38 billion in shareholder equity. That whole empire rests on $38 billion worth of shareholder equity. Now, if you're Jamie Dimon, what are you looking at? Because I see $9 to $12 billion a quarter in asset management fees that would really pump up the bottom line of my bank. That's what I see. $38 billion of the shareholder equity is nothing compared to the $9 trillion they have as assets under management and the amount of political power they think that gives them. And who do you think is screaming the worst about 5% interest rates, which is why I'm like, no, the Fed can't stop. These are the people you have to break, and you do not break them until you do not stop until you break them. Silicon Valley Bank was a nice overture. It's Act 1. Act 2 is you take out BlackRock.
All right, and on that note, that's all. It looks like a good way to end it. Hey guys, I didn't even mention the financial summit. I'm gonna pull up Tom's links one more time, and before I do that, maybe I'll get Tom over there. The next financial summit is going to be in the UAE, but a closer event's happening to home in Las Vegas in December. The financial summit is in the UAE in November. Once again, Tom, thank you for joining us. His information is in the video description. Here is his Twitter. Follow him on Twitter if you enjoyed his commentary. That's his website. And you have a private channel where you talk in more detail for your subscribers. Those that are interested could check out Patreon.
Thank you. Tone, it's been great. It's been a lot of fun. Thank you very much.
Yeah, awesome. Thanks for joining. And hopefully we cross paths again soon, either on Spaces or on another stream somewhere.
Absolutely, man.